Okay, guys, good morning. This is a special one coming at you 5 a.m. here on Saturday, May the 17th. And yeah, what a crazy end of the week of the market we had. We had a surprise sneak attack, we're calling it, by Moody's credit rating agency. And yeah, long story short, right before the market closed yesterday, they decided to announce that they were going to downgrade the US economy, basically. And we saw a triple A rating slashed to Aa1. Here's a pretty good chart to kind of explain it. So America was AAA, now we're AA1 due to rising government debt. So kind of insane to see them do this when they did it so last minute. This this downgrade could have happened at any point in the last several years, maybe 10 years because of the US national debt. We can pull it up, US national debt. It's worth seeing this. Obviously, it's out of control. Things are definitely insane. But not to be too political, we've never had an administration so determined to correct the debt to make things better. We have the Doge clock saving billions. Trump's administration, from what I can tell, certainly since the past 10 years of myself being interested in this area, they're the first administration to really talk about this and try to fix this debt problem. And yet they get a downgrade. So it's just makes no sense to me. It's insane. There's, I think, political outside external factors went in to cause this sneak attack. So yeah, the comment section is pretty funny. People, I don't see many folks agreeing with this. Bit of an insane move. And we've seen the market drop a little bit. So I want to show you here the past week, past day maybe. So right here, market closes at 4 o'clock. And then the news breaks, and then we're down overnight by about 1% on the VU. It's not a crazy reaction yet. There may be more that happens between now and Monday morning, of course, more of Trump's response, perhaps. More volatile stocks like Robinhood, like HIMS, they've experienced a bit of a 5% pullback. So, you know, anyone that was selling their cash secured puts here is probably pretty upset because they've dropped already closer to their strike price. Although only sell puts and stocks you want to own, of course. But it's still, the timing is just insane. We get into the last minute for this to happen. A few thoughts. I mean, Stephen said it pretty well here. Moody's is now officially a political agency. They downgraded America's credit rating from AAA under Trump, but before Biden spent 5 trillion and sent inflation to 9% and not a problem. No downgrade, nothing. So yeah, makes no sense. And then this, of course, they got a close to 1 billion penalty for the '08 financial crisis when they gave AAA ratings to those subprime mortgage junk bonds. So we can't trust them. They are as reliable as a Democrat, basically. Not to be political, but it's early. I can't think of too much stuff. So that's where we are there. It's a sneak attack. We'll see how it affects the overall market. One thing's for sure, I think interest rates are going to go higher now. I think the Fed's going to have a hard time potentially cutting their interest rates because of this. They're going to see uncertainty and fear, right? They're going to see the US dollar getting weaker. They're going to see this downgrade of the economy. They're going to be concerned. So yeah, we're going to see how this affects the market. Bond rates might also increase because of this. So it's going to see a bit of uncertainty. You can see the US 6, 1 year, 2 year, and 10-year here, 4.5, et cetera, et cetera. So everything's still pretty expensive. What is the average US a 30-year mortgage rate right now? I believe it's like closer to 7.5 or 8%. I think it's sneaking back up towards the 8% mark. We can pull it up real quick. If you don't use an insane amount of points, you might get one closer to 7 or 6.5, but it's not good, put it that way. And mortgage rates are still pretty high. Other news we're seeing across here, a little bit of fear-based headlines, right? Because fear sells, and you can see that here certainly in the economic headlines here. Low-end consumer feel the pinch. Consumer sentiments are low. J.P. Morgan Jimmy Dimon says recession is still on the table, and then Fed Powell just being standoffish, not wanting to get too involved. So yeah, it's insane to see Moody's do this right now during a period of strength, I would call it. Uh, Tariffs have dropped significantly. Trade deals are coming in. The big beautiful bill is pushing its way through Congress, and Moody's haven't even seen what it really contains. It looks good for most of Americans, I think, and tax cuts for sure are huge. We want to see that. So we're moving in the right direction despite all of the noise, and that's why the downgrade is on the credit rating specifically. Sorry, is such a weird timing. It doesn't make any sense. So keep an eye on that. You want to be aware of these things. Brings the 116-year-old agency into line with its rivals. The decision to lower the United States credit profile would be expected at the margin to lift the yield that investors demand over to buy U.S. Treasury debt to reflect more risk, but could dampen sentiment toward owning U.S. assets, including stocks. So think about that. I mean, they had years to do this as the debt was increasing, as government spending was out of control, and COVID-19 stimulus, and trillions of dollars being injected, and a rise in asset prices through, I'll say, inflationary measures. Myself, we sold our first home, bought a second home, so we got a bigger mortgage now, bigger interest rate. So not happy about that, but it is what it is. So yeah, that's where we are. And then the fear and greed index is now at 71. We are 4 points away from getting into extreme greed. This is where you want to be fearful of buying heavily because people are extremely greedy. You should expect to see a bit of a change. We've gone from extreme fear to close to extreme greed in less than 1 month. So that's significant. You want to be aware of that. Look at this moving average right here on the market momentum. This is a very good indicator you want to be aware of. So S&P 500 blue, 125 moving average in the orange. We've crossed that moving average, and it likes to stay in line or relating to. So that's a pretty significant increase there. I wouldn't be surprised to see a sideways chop and to come down a little bit and test that 125-day moving average again, and then maybe push back up to all-time highs as time progresses. They just can't go straight up like a rocket ship too quickly. So that's where we are. We're seeing overheated, overbought, getting close to greed, and we're seeing these headlines as well coming out. Meanwhile, Trump is in well, he was in the Middle East securing massive trade deals and the deals for America. The real fly said it pretty well here. Moody's had no issue whatsoever with Biden's lunatic COVID handouts of 5 trillion or the wide array of inflationary policies foisted on Americans. Lo and behold, the Trump administration, for the first time in a long time, is attempting to rein in spending and waste and fraud and more. And they get downgraded 100% politically motivated. It's hard to disagree with that because the timing just reeks of um, compromise. I thought Nick said something pretty interesting here. It's worth looking at. The housing market has never been as unaffordable as it is currently with inflation-adjusted home prices. Um, yeah, there's many reasons that can factor into this, of course, but the data is worth looking at, of course. So he obviously is the owner, the CEO of forget which company, but anyway, that's just a really good thing to be aware of. We are seeing high home prices, high inflation, and you could see a drop, of course. It's done it before. It could do it again. It could chop sideways and up a little bit higher, but we're definitely seeing tension across the marketplace. Yeah, so we'll finish here real quick. Look at a few. Well, I'll look at this real quick. A few of our individual stocks. I've got a lot of Apple shares when I used to work at Apple, and not worried about it. Extremely low cost basis. Just I'll sell covered calls on Apple and maybe look at opportunities to offset some of them for sure. Tesla is the one we want to look at real quick. TradingView is currently down for maintenance, so we can't use TradingView unless it's back in. Perfect. It's working. Look at that. They must have known I was trying to make a video, so they fixed it. It's nice to see Tesla getting plenty of love, back up to 349. It's no longer 225 and dropping, as Tim Walt said. So we're seeing some good strength there in Tesla and the overall Mag 7. Google hanging in 167. NVDA is back up to 345 levels, so almost positive year to date. That's what's interesting to see with NVIDIA. Apple, of course, is still 15% down year to date because they're up so high in the 240 range. But hopefully, we'll see a recovery. Microsoft, likewise, is positive year to date, so they made a full recovery. And then Meta, I think, they're 8% positive year to date. So yeah, this is where we are. We're seeing some good strength in the Mag 7, and we're going to finish on Bitcoin, of course. Where are we with Bitcoin? Let's go to the 1-year chart. 102. So would have seen a little bit of a test back this past week from 103, 104 down to 102, and we're definitely seeing a good hang here for the past 10 days in the 100 range, 102, which is nice. So you can call that maybe consolidation across that line. And where does it go next? We'll see. So that's where we are, guys. Have a wonderful day and take care.